This is the Tim and Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, nononsenseforex.com, and podcast players everywhere. Episode 257 is brought to us by Blueberry. I keep calling it Blueberry Markets. That's not their name anymore. I'm just so used to saying it, but they have really gotten bigger over the years, and as a result, they can now compete on spreads. And they are doing that. They are competing for the lowest spreads across the board. So now not only are you getting the best broker in the world with the best customer service by far, you will get your own personal concierge with my affiliate link. Not only can you trade pretty much every market under the sun on MT4, MT5, or TradingView, but now you can get some of the lowest spreads across the board, and that makes a big difference when you trade for long periods of time. There is no reason to be with your current broker. There is every reason to switch over to Blueberry. Do it now. Make the switch, get all the sign-up bonuses, get to know your new concierge, and trade with the best broker on the gosh darn planet. It is the Tim and Contrarian Podcast, a late Sunday edition. We thank you for being patient, as always. But I thought what we would do is, since it's the end of May, go ahead and take a look at the macro bull and bear cases for the rest of 2026. Now, you might be saying, well, VP, we are long-term buy and hold investors. It kind of doesn't really matter what happens the rest of this year. We like what we like, and we are strong buy and holders. And my response to that would be, yes, we absolutely are. However, sometimes really good buying opportunities can arise when you have drama happening in the world, and you often see it. Sometimes you just need a catalyst, and that catalyst can occur and never look back, or at least not for a while. So let's just take a look at the game board we have in front of us, at least for the rest of this year, and then see where the opportunities might be. So late this past week, the United States and Iran reached a MOU, a Memorandum of Understanding, to continue the, quote, ceasefire for the next 60 days. And you do kind of have to laugh when you hear that, because at any given time, Iran might continue bombing somebody, or Israel might continue bombing somebody, or the United States might continue bombing somebody. And this whole MOU is not even worth the paper it's written on. But it is out there. And really, I think if we've learned anything, I think we should have known this from the start. But it's really now is the time we should be paying attention to what's going on in Iran, not back when everybody was panicking. And from an economic standpoint, saying how this was the end of any bullishness in the economy. If you want to go to the S&P 500 chart right now and put it on the weekly, it wasn't even a V-shaped recovery. It was more like a check mark shaped recovery. Like the whole thing looks like a check mark. The market has gone extremely bullish, and all of the panicins look really, really silly. They could still be right in the end. Again, we're going to go over the bull and bear cases today. But it just goes to show when the whole world is panicking out there, it makes more sense to make fun of them, like I did, than it would be to fall into the panic. But what a lot of this has done, one of the strange effects that have proliferated from this war so far, and I'm not calling it World War III either, by the way. I also think that's an overreaction. Some people are like, well, no, technically, there's a lot of different countries involved. Yeah, but do you really want to compare this or put it in the same category as World Wars I and II, where millions of people were getting their heads blown off? Like, I'm not going to do that. But anyway, whatever it is, it might have actually just united the United States and China, or at least brought them a bit closer for the time being. What it has certainly done is united everybody in the Middle East for the time being, because the IRGC in Iran just had the brilliant idea to just start lobbing missiles at everybody. And now you had the world kind of divided on, what should we do with Iran in terms of their nuclear program. You had half saying that, they cannot have any type of bomb because it's simply too dangerous. And then you had the other half saying, oh, come on, it's, what are they going to do with it? They're allowed to have nuclear energy and make their country better like everybody else has. They're not going to bomb anybody with it. Well, now, the entire world, including the Iranian people, are looking at the IRGC now like, holy crap, these people will literally bomb anybody. Like, could you imagine if there was a nuke attached to that? we need to shut these people down for good. And then China is not so worried about getting bombed, but the whole Iran deciding to shut down the Strait of Hormuz, at least before the United States decided to do it, hurt nobody more than it did China. So even though there's a bit of a dependency over there, it was really seen as a big betrayal between those two countries. And so then the United States comes in and says, hey, at least for the time being, that was the whole point of this trip over to China. The United States doesn't want to negotiate with China, not in this way, but opportunity arises sometimes. And Trump came down with the entire cavalry, and I'm sure quite a few deals were made. One of them was like, hey, look, we can just bring Alaska online and at least alleviate some of this oil problem in the meantime, and you can just buy from us. And so you had two countries who were a bit vulnerable at this time. China, due to their energy concerns, and then the United States, and we have said this since since New Year's Day, the very first episode we did of this year, how pretty much everything this year economically is going to hinge on the midterm elections in the United States in November. Trump has to end this somehow, and he has to get oil prices back down. Which, if you look so far, at least in the Western Hemisphere, this is happening. Gas prices may still be high, but they will come down as the price of oil comes down too. And we know by now, gas prices and elections are directly correlated. During the last midterms, the Biden administration drained the Strategic Petroleum Reserve about as far as they could just to get gas prices down so they could win votes, and it worked. Like the American voter, on average, is pretty slow and simple. And this is really most countries, if we're being fair, but the United States is no exception. And so with that in mind, let's go over the bull cases for 2026. Now, what else does the Trump administration need to do? So they need this war to be almost all the way over, and at least the residual effects, the parts that Americans feel the most, which is going to be gas prices, that's got to come down. And as we've seen, there is a pretty strong effect between what the price of oil does as it relates to the overall price of world economies. Now, the PR hit the Trump administration has taken from this seems to be pretty rough. You had entire factions inside the Republican Party and on social media completely turn on him during this time. And the Trump administration will need to dig themselves out of that somehow. So gas prices is one way, but as we said at the very top of the year, there's a pretty good chance they're going to need to run the economy even hotter. And you do that two additional ways. One, by lowering interest rates. That's a big topic of conversation right now. Is are interest rates going to rise or drop? Well, we know Donald Trump and Treasury Secretary Scott Bessent both want interest rates to drop. Now, what will new Fed Chair Kevin Warsh do? Well, we don't know, but he was handpicked by Trump, and that does mean something. Another bull case here, and say what you want about this, but there might even be stimulus checks involved this year. And we have all seen the effect on stimulus checks in the past. Again, when you put free money into the economy, number go up across the board. So what will this whole recovery plan look like? Well, it's probably going to be a combination of those things. There might even be things we haven't thought of, but I would expect to see this. Now, what are the bear cases? Because there are certainly bear cases here. One is if the war just keeps continuing and Iran's like, nope, we're kind of pot committed here. Like, we don't really have any other choice but just to keep throwing bombs at people. We've seen this. We've seen this all over Europe. When governments make bad decisions, they typically don't say, oh, my bad, I'll fix it. They generally double down and triple down on those bad decisions. Plus, the IRGC hates Trump, and anything they can do to screw him over, they're going to probably do. They actually have a little bit of power here in that regard, and that might be the only power they have left. Bear case number two, there are residual effects from this war. There's a lot of infrastructure that got bombed and went offline. And in the oil world, for example, you can't just turn these things back on quickly. Sometimes they take years to come back on. And what is done cannot be undone. I think this will be a really interesting experiment to see, okay, what actually carries more weight on world economies? or let's just say even the United States stock market, actual fundamentals, like real things going on in the world with energy, because we know energy is everything, or money printing and stimmy checks and interest rate drops. Because if we learned anything back during 2021, the latter can win out over the former. You can take something so economically devastating as COVID and just financially engineer your way out of it and have a V-shaped recovery like we've had so far. It's silly, it's comical at this point, but if that's what's going on, that's what's going on, and we need to be aware of it. And the last bull case, I would say, is you want to have this response to a slowing economy or a slowing stock market. Well, the market's already kind of up. It's gone up a lot. Do you even need to fix that? Do you need to drop rates? Do you even need to print money now? Like nobody saw this coming. Even the true contrarians like us out there, I don't think anybody would think, during the beginning of the war that the S&P would be over 7,500 now. So that begs the question, do you need to fix what's not really broken at all? It's almost like mission accomplished already on the S&P. If you can just get gas prices down, there might not be much else to do here. So those are my bull and bear cases. Feel free to add yours. This podcast does go to YouTube. If you want to go in the comments section and sound off and let us know also, are you more bullish or are you more bearish for the rest of this year, at least leading into midterms? Things could completely change after that. But let's just say that this year ends in early November on Election Day. From here until there, are you bullish or are you bearish, and why? We get some really good responses from you guys. Actually, I put out on X yesterday, do you guys think the IPO of SpaceX is going to end up higher or lower a month after the launch? And I got some really thoughtful opinions on both sides. And I love when this happens. We have some good intellectual capital amongst us. We should share it more. But anyway, I will continue to share my thoughts on how I think this might affect a handful of the things we invest in as contrarian long-term buy and hold investors. Starting with gold and silver, we talked in last week's episode how the gold to copper ratio has flipped bearish, and it officially has at this point. This would mostly mean that gold and silver are going to stay relatively flat during this time, which is not a bad thing. That's actually quite a good thing if you're looking to add more. And if we can just stay flat, this should remain bullish for gold and silver mining stocks. But if you don't see a rise in the price of either one of those two instruments, don't be too surprised. As far as silver goes, short term, we are actually pretty good on supply. Long term, we're still effed. But as of right now, there's no reason to hit the panic button on silver. So I would expect that to stay relatively flat as well. Then again, long term, I've been pretty accurate. Shorter term, I've been less accurate. So take that for what it is. Bitcoin, it's odd. Bitcoin really did break that correlation between it and the TQQQ ETF, and it uncorrelated to the downside. Much to the chagrin of Bitcoin maxis out there who thought otherwise, but it's no surprise they were wrong because they are actually not very well versed in the overall financial landscape. They're too compartmentalized. They learned finance through the lens of Bitcoin, which is not bad. You could certainly do worse, but it's times like this where it's like, hey guys, what happened here? We were supposed to break that correlation to the upside, not the downside. But really when it comes to Bitcoin, it's going to come down to money printing. If we do it, well then you can forget what I said about gold. It's going to go up a lot. Bitcoin's going to go up a lot. But it's the whole question, do we even need to print money at this point? Or will keeping the U.S. stock market moving up and to the right suffice as long as we get gas prices down at the same time? I really don't have a directional bias on Bitcoin right now. Long term, I think it's always a great idea to stack it, especially when prices are down. Now, we just said the gold to copper ratio went bearish, so what about copper? Well, I would expect continued bullishness in copper. It's one of those weird things like right now. We got on board way before all the hedge funds did, but all the big hedge funds are kind of in on copper right now. And you have to ask yourself, is that actually bullish or is that actually bearish? I guess time will tell here. If every hedge fund is in and price looks like this, what is going to happen when they eventually sell? Because a lot of these hedge funds don't just sit there and buy and hold forever like we do. There will come a time where they start dumping. So I would say bullish with caution on copper. But I will say, too, and this is something we almost never talk about on the podcast, and that's going to be aluminum. You kind of lump aluminum and copper together. But there's been a lot of aluminum infrastructure that's gotten obliterated in the Middle East during this war. And not small infrastructure either. A lot of people don't know that. And with silver and copper at the prices they are, the world is scrambling for alternatives. Aluminum was one of them. And so now you have that bull case on top of the bull case of a lot of the supply mechanisms going offline. So maybe keep an eye out there. But I really do think, and again, you have to be a real hardcore buy and holder to appreciate this particular investment. But we are here, and it has treated us very well. But I really think the big winner here is actually uranium. This whole situation this past year in Iran was really a wake-up call to the rest of the world that they need to get their act in gear when it comes to breaking dependency from oil and gas, especially in the Eastern Hemisphere. In the Western Hemisphere, we're going to be fine with it for a while. But uranium has been the right answer since day one, a combination of it and renewables. But remember, the best of the two renewables is solar. It is not wind. And when it comes to solar, you have to use a lot of silver. And the price of silver is quite high. The right answer, the best answer this entire time has always been uranium and nuclear energy. Now, uranium might be getting maybe not the best publicity when you talk about Iran's nuclear capabilities, but if you're looking at this pragmatically, and you're looking at this through the eyes of investors, the people who badmouth uranium because of Fukushima and 3 Mile Island and nuclear warheads, and therefore uranium bad and nuclear energy bad, those people don't have a lot of money. Can we just be honest here? They're not really investors. So if what I just said is true, and I think it is that even really a bear case? That people with no money don't like it? Reality is reality at some point. I tell my environmentalist sister this all the time. I've told you guys here on the podcast that nobody's going to give a raging F about the environment once the lights go out. Energy is life. Energy is prosperity. And the more of it you have, the more prosperous you are. There's an interesting response to a post on X this past week. I should have shared it. Talking about how Europe uses half of the energy consumption as the United States. And why is this? And the whole point was to make the United States look like an energy overconsumer. Countries are countries, right? Why do some countries use more energy than others? And the response was perfect. Well, it's for the same reason, Europe has twice the energy consumption of the Gambia, because energy consumption equals prosperity. And speaking of Europe, they're going to be in a constant bind because Europe just doesn't produce a lot of their own. And so if people are wondering why European governments keep going cuckoo with renewables and telling people not to use AC in the summertime, this is why. They don't have an abundance because it's their geography. They've always been in a bind here. And the answer to their problems is also nuclear, despite what they've decided to do with their own nuclear programs. So overall, I think now is a much more appropriate time to pay attention to what's going on in Iran and how this affects the lead up into the 2026 midterms in the United States. I think those are going to be the two main stories by far as it relates to investing. And honestly, what happens with the SpaceX IPO might be third. I don't think really anything beyond that matters a whole lot. Again, please tell me in the comments if you disagree. I've said before, I can understand how other countries don't like how things are so U.S. centric right now as it relates to the economy overall and investments and everything. But my response to that is look, Would you rather have to sit there and worry about what's going on in 20 different countries, or simply just worry about what's going on in one? I would certainly choose the latter. I don't care which country it is. If it's the United States, if it's Canada, if it's Laos, I don't care. I just want to make money. You guys want to make money. Let's continue to make money together. And let's continue to do the opposite of what the panic-stricken crowd does. Even though in a cruel twist of irony, they're the ones calling us crazy, well, that's fine. Go ahead. Call us crazy. And then keep wondering why we're always so early.